Welcome to Businessline with me, Pranav Bakshi. Our first story looks at one of the oldest apparel companies in India, Raymond. It's getting into an aggressive phase of expansion. After making huge losses this year, the company is tweaking its strategy to make its stores more profitable with minimal investment.
Small is big. That's Raymond's mantra for its next phase of expansion. The company plans to pump in 100 crores to open 289 stores in India, targeting Tier 4 and 5 cities like Bijapur, Bellary, Chidambaram, Kanchipuram and more. All stores are to be up and running by March 2011.
We're getting into smaller cities driven by our firm belief that the consumer in these towns, they want to buy our products and they have not just the desire to buy our products, they also have the purchasing power to buy our products. Rather than putting them through the discomfort of traveling to nearby larger towns, we are taking our products and our shopping ambience to them in their small towns.
Last year, the company reported losses to the tune of 231 crores. Now Raymond plans to downscale in-store investments by hiring less expensive interior decorators and carpenters. Raymond will continue with its existing strategy of partnering with franchisees in this phase of retail expansion.
The losses of last year were basically accounted for two heads. One was we had large foreign exchange covers contracts like many other large Indian corporates as you would have seen, and we lost more than 130 crores only because of the foreign exchange cover that we had taken earlier, and the rupee going to 52 rupees we were taken by surprise like every other corporate house. So that was one very large chunk. Second was we have a joint venture for denim fabric, which was a global footprint. And last year and the year before that, the denim business globally had gone into a steep downturn, because of which we had to close down our factory in Belgium and another factory in the US.
Recently, the 84-year-old company announced plans to get into real estate, quit the JV with Italy's Grotto Spa, and now this. Perhaps with time, Raymond will consolidate its plans to become the complete man.
Raymond is hoping to earn around 200 crores over the next couple of years, 100% growth on its initial investment. Moving on, all eyes were set on the Infosys results this week, as these set the tone for the IT services sector. And investors weren't disappointed, though they didn't cheer either. Here's the report.
Infosys did what it's known to do by beating its profit guidance for the second quarter. Income grew over 2% and net profit by 0.85% quarter on quarter. This came on the back of some volume improvement, better employee utilization and belt tightening at a time when billing rates are under pressure and client budgets are under a leash.
That the budgets are going to be flat from this year onwards. We'll get a better indication when we get a visibility into those budgets actually. So what we believe is that this year the clients are going to be cautious. What gives us the confidence is that we are able to sustain the relationships, we are able to benefit from the consolidation, we are able to manage our business.
Greater confidence in the future and some improvement in the environment overseas seems to have prodded an upward revision in guidance. Infosys upped its guidance for fiscal 2010 for dollar revenues between 2.21 to 3.37%, rupee revenue by 1.4 to 2.5%, and EPS between 99.6 to 100 rupees. The revision in guidance, while positive, however does not reflect a return to the growth phase, as the management comments indicate.
We added 35 new clients. We are increasing the manpower addition for the whole year from 18,000 to 20,000. We are hiring more laterals with the experience. So we are trying to prepare the model for the growth, but we are cautious because the clients are still cautious. We don't think the world has changed forever. There is a reset, there is some optimism, but it's not translating till now.
The Infosys stock reacted positively to the news at first, surging 4% to the day's high of 2,293 rupees before slipping to close with a marginal loss for the day at 2,178 rupees as greater clarity from the management on the outlook emerged.
The stock may have ended the day lower, but that's not just a function of the numbers which were announced. The overall markets were a little sluggish. The rupee has kind of played spoil sport over the past couple of days now. And of course, the stock is not exactly trading at extremely cheap valuations. That's one point. But having met the management here at the Infosys headquarters, one thing is certain, the body language is extremely positive. They're sounding a lot more gung-ho than they have in the last couple of quarters. Operationally, a lot of things have improved. And the street does believe that by the time the management is done with this particular year, that's FY010, they might actually end up doing 106 to 107 odd rupees compared to 100 that they've guided in this quarter. So watch out for more upgrades to the full year guidance on the EPS front as we go along. With Meg Desai in Mumbai, Prashant Nair, reporting out of the Infosys headquarters in Bangalore for NDTV Profit.
Time now for some market updates.
The week closed on a sober note, with the BSE Sensex making several attempts to hold up beyond the 17,000 mark, but failing. The index closed at 16,642, down 2.8% for the week. International gold prices surged past their March 2008 record of $1,032 per ounce and rose as high as $1,061 per ounce during the week before subsiding. A weakening US dollar helped this trend. Tech major Infosys Technologies kicked off the September results season with numbers that beat expectations. The company has managed a 3.1% growth in revenues and 7.5% growth in net profits over September 2008 quarter. Signaling better times, the company also announced an 8% salary hike for its Indian staff effective October 1st. The week saw large companies such as L&T and Tata Motors raise funds in the international markets to fund operations and repay debt. The week ahead will be closely watched for the September quarter results of companies. BSE will hold its special Muhurat trading session on Saturday, the 17th of October between 6:15 and 7:15 p.m.
If you're a new investor or one who wants to expand your mutual fund portfolio, keep watching our show. We'll be back in a bit with expert views on the topic.